My morning must-read this morning is Paul Krugman writing on an obscure economics, not monopoly, but monopsony, and Amazon. Amazon's monopsony is not okay. Does Amazon really have robber baron-type market power? When it comes to books, definitely. Amazon overwhelmingly dominates online book sales with market share comparable to Standard Oil of another time and place.
What is monopsony? Can you define that?
Monopsony is thinking like a Singapore rubber plantation. It is a British thing. It is colonial. Stephen King passed the exam. I did not. I mean, the bottom line is this is a different economics.
A monopsony is a sole buyer rather than a sole seller. So you're the person who's buying all the stuff rather than selling all the stuff. And by being the sole buyer, you can basically dictate the price to all the producers who are supplying.
And Amazon's that, right, Brendan?
Sorry.
Thank you for not saying Singapore rubber plantation when explaining what a monopsony is. I'm curious about this because there's been a shift in U.S. regulatory policy over the last 30 years. It used to be that we were really worried about monopsony, that we wanted, we considered, regulation was a way to avoid restraint of trade. We wanted to be anybody to be able to sell to anybody. And then in the early 80s, we just focused on consumer benefit. If it lowered prices, the merger was okay. Is there going to be a shift away from that in the future?
Well, I think part of the problem is that the products that you get from Amazon, in some cases, are rather useful, like Kindles, downloading lots and lots of books, traveling around the world, as I do quite a lot, having sort of 50, 60 books downloaded into the Kindle. You don't get a bad back in the way I used to get a bad back, so there are certain advantages. So focusing on what the consumer wants may be reasonably sensible, even though you have, at least for a while, a monopsony. But ultimately, monopsonies are dangerous because they can rig competitive pressures, they can change things and make life more difficult.
The issue for Amazon isn't just the book trade, it's the everything trade.
Absolutely, I agree, yes.
Yeah, I mean, they have the same issues that Walmart does, or did.
Yes. And that's something which, again, needs to be watched in the months ahead.
David Harrow, does a monopsony like Amazon make for an attractive investment at any level for a value investor?
Well, if it's stable and it demonstrates a good defendable cash flow stream, absolutely. I mean, anything that creates stability in that cash flow stream, like having control, is something you could price and analyze and make an investment case.
Because when you look at Amazon's numbers, you wouldn't say that this is something a value investor would look at.
Well, there's two parts to Amazon. One is what they're currently doing, and what Amazon says, if we stop growing, we're actually making lots and lots of money, which is a possibility.
Well, let's look back 20 years. Remember, cable television was the same promise, and to an extent, Comcast and the others delivered on that shift from investment to cash flow. Do you have the same belief with Amazon, whether you own it or not, that someday they're going to make that shift?
Yeah, we own it in some of our portfolios, and it's basically based on that they have the infrastructure in place that if they would slow down their rate of new investment, there would be a lot of profits.